Are you sick and tired of failing evaluations with companies like Apex Trader Funding? Avoiding these crucial mistakes most traders make could be the difference between you passing and failing. I not only overcame these crucial mistakes myself, but I've also helped 85 plus traders overcome these common mistakes. When I uploaded this video a couple days ago, it had annoying background music in it. So this is just the same video, just remove the background music. This dude's comment backed me up. He's like, "What's up with the background music? Is this a music video? How annoying. What's wrong with you?" So I apologize for the background music. It won't be on any more of my videos. Just trying something new. So let's go ahead and get back into your content here with number 1 is holding winners for too long. Many traders believe that they need to let their winners run, but you'll find out that is not the case. Holding winners for too long when you're doing evaluations with companies like Apex Trader Funding or Bulenox. Both of these companies have trailing drawdown, right? If you hold on for your winners for too long, what's going to end up happening is price is going to eventually come against you. By that, I mean, say you enter a trade and it goes your way, and your trailing drawdown starts here at $2,500, right? So let's say you enter a trade and it goes your way, and you just let it run, and now you're plus $1,000 on the position. All good, right? You're all good until it comes back down against you. So instead of taking profits here, you didn't, right? So now you're still in the trade. Let's say you exit here at 200, or let's say you exit at plus $250. So you still made $250 on the trade, but your trailing drawdown was originally down here. You're in the trade. So your trailing drawdown is now, it was originally starting balance at 2,500, which would be 47,500. Right, so it's originally 47,500 is the lowest your balance could go until it blows the account. Regardless if you took profit or not, that trailing drawdown is now at 48,500. It is $1,000 closer to your current balance than it was before. You made 250 on the trade, great, but you technically now only have a drawdown of $1,750. You cannot let your winners run. I never let my profits on a single trade exceed $500. I will exit a contract to avoid this. All right, let's move on here. Number 2, all in, all out risk management strategies. These are detrimental to trader funding evaluations. Not only trailing drawdown ones, but all of them. Find me a trader that is profitable that uses all in, all out risk management. I bet you can almost never find a profitable trader that is trading all in, all out risk management. It is a common theme you'll find with profitable traders is they scale in and out of trades. They never trade all in, all out. This is the biggest mistake I see newer traders making when they're trying to attempt to get funded with funding companies. For one, the major thing it does is mitigate your risk, but it also is 3 things in one. It allows you to keep the trailing drawdown off your back, it mitigates your risk, and it guarantees a profit on a trade. Now, you're probably looking at this video right now with that kind of face. You're probably like, what the fuck is he talking about? Okay, so if you enter a trade and you start with 2 contracts, yeah, let's go 2 contracts and at 5 points of risk each for a total. So the total risk on the trade is $500. Not saying that that's what you should be risking. We'll go over that a little bit later. So you got 2 contracts, you're risking 5 points on ES. So that would be 10 points total at $50 a point. That's $500. Let's say you enter the trade and price goes your way 7.5 points, which is $375 per contract. So if you take one off at 7.5 points, that is $375 profit. Now you only have 1 contract remaining. at a total risk of $250. But you already pocketed $375. That means no matter what happens, you will have a profit of $125 or $125 on the trade no matter what. Even if price comes all the way back down and hits your stop, you will still have a winning trade of $125. So as you can see, that is a huge benefit, right? If you're able to guarantee profit, keep the trailing drawdown off your back, and mitigate your risk, and it helps with your mental side. Once you take it off, it's a guaranteed trade. You're no longer stressing about it. Number 3, the third mistake I often see traders make is not playing the game. Not understanding that these prop firms are not your friend, they're not your business partner, they are here to make money off of you. These companies make the rules a certain way because they know that's how people trade. And they know that if they have a certain set of rules within a certain amount of time, it will mess with your head and you will fail over and over and over again. And the more you fail, the more you want it and the faster you want it, right? So there comes a point after failing so many times, investing so much money and so much time, you're not going to give up, or at least I wouldn't. What do? You have to stop and think for a second. What is everyone else doing? They are letting their winners run. They're not scaling out. They're only trading one account at a time, and they're not treating it as a business. So we already went over letting winners run. We already went over scaling out. Trading one account. Most of these companies, especially Bulenox and Apex Trader Funding, are set up in a way that you benefit greatly by having multiple accounts. If you have multiple accounts that you're buying at a discounted price, you're only paying $16 to $18 per 50K valuation. That is extremely cheap. So why are you only buying one account? If you buy 5 to 10, it relieves the stress. It allows you to trade more freely, and then you can do what I do. What I like to do is I like to rotate the accounts, and I use windows of time. For example, 8:30 a.m. to 9. And then when I come to my next window at 11 to 11:45, I switch to a new account. And then from 1 to 2 p.m., I use a different account. If you check out my website, verifiedfundingcompanies.com, I'll put the link in the description. You can find the latest discounts and the best discounts you're going to find for trader funding. You head over to here on this right here. It will take you to my discount page that I update every single day. I have a newsletter you can sign up for. But what I'm trying to get at here is this is going to allow you to get the accounts for 90% off. You have 90% off here as well. Take profit trader payouts from day one. Once you passed an Apex Trader Funding or a Bulenox evaluation and gotten a payout, then it's time to move on to companies like Take Profit Trader. They have a little bit stricter rules, but they have payouts from day one. But the accounts are a little bit more expensive. So instead of paying the normal $13 to $19 with Apex or Bulenox, you're looking at paying $100 per evaluation. But with Take Profit Trader, once you're over the threshold, you can ask for a payout and then receive it that day, which that is a game changer. Topstep Trader Funding, a little bit more expensive, right? But every 5 days you can get a payout. So this is what I'm talking about here. With the ability to have multiple accounts with multiple companies and treating it like a business, if your original investment is $18 for the evaluation, plus let's say you buy 5 of them, you pass 2. So 18 times 5 equals 144. And then for those 2 you passed, you're paying $100 per activation fee. 200 equals $344. Once you get a payout, with both Bulenox and Apex is going to be around 1,500 to 2,000 per account. So let's just say go 1,700 and then minus how much you paid. So right there, you made $1,366 off 5 accounts. That's how you treat this like a business. And then after that, you're in profit on those accounts. Go buy another one, another set of 5, pass 2 more, and then once they're in profit, they're risk free at that point. They're in the money. It's now a profitable business. Then let's say you have 4 of them at 2,000, goes $8,000 a month. And then once you get past the thresholds and the limited payout structure, hopefully you have some built up, and then you get $5,000 per those 4 equals $20,000 months. And then you can see how you can start snowballing this and it gets big. So play the game, take advantage of the companies as they're taking advantage of you. And if you think they're not taking advantage of you, you got to stop thinking that way. They're not your friend. They don't have your best interest in mind. These companies operate off of fees. The traders that get the payout, so let's say trader 1, we'll call trader 1. He knows about the mistakes because he watches my videos. And then you have trader 2, and he doesn't watch my videos and is clueless as to how this all works. He thinks he knows, but he really doesn't. There are 100,000 of these traders in the number 2, and then there are 100 of these traders. This is just a fraction to make you understand. So for every 100,000 trader 2s, there are 100 that are decent traders that understand how the game works. Trader 2 pays for trader 1. So they are taking trader 2's fees, their blowups, their evaluations, their resets, and they are paying trader 1 with it. So you cannot think that they have your best interest in mind, because they don't. Obviously, I think most of the CEOs of the companies do want you to succeed, but they understand that there's always going to be 90% more trader 2s that are going to create more money than trader 1 takes, thus for creating a profit. That's why they have rules like trailing drawdown. Number 4, the 4th mistake I see traders constantly making when trying to pass Apex Trader funding evaluations: not adhering to risk of ruin rules. I'd say 90% of traders don't understand this concept or aren't even aware that it exists. So this one is huge and makes a big difference. Ruin is the chances of a certain amount of losses happening in a row that will ruin your account and you will no longer be able to trade. So with a 1.7 payoff ratio, with a win rate of 55%, and risking 9% of your equity, which by equity I mean drawdown, calculate risk of ruin. It is 0.1989%. Let's skew this a little bit. Let's go with a payoff ratio of 1. Now you have a 10% chance of the account going to 0. That is 0, right? So let's skew this a little bit more. Let's say you have a accuracy rate of 50%. Now you're at the 100%. There is a 100% chance you will blow that account up. How many of you guys know what your win rate is and know what your R&R is? At any given moment, do you know what these are? If you do not, you are being negligent and irresponsible, and you are never going to make it until you understand these numbers. Let's go with a payoff ratio of 2. And let's say you risk 9, still 0.4% chance. So the risk of ruin is a mathematic equation, I guess you could call it, that is going to calculate the odds of this happening over 100 trades. Let's go ahead and read this article here.
If you're not familiar with the risk of ruin and how it's calculated, keep reading. How would you like to know in one statistic whether you are going to make money or blow up your account? Yep, that's right. With one trading statistic, you can find out which of these two paths you're going down. It's called risk of ruin, ROAR, a statistic that is crucial to know if you're serious about making money in trading. For example, let's say you are risking 10% of your capital per trade, have a 2-to-1 reward to risk ratio per trade, RR, and an accuracy rate of 35%. Based on these numbers, you would have a 60.8% probability of losing. The mathematics of the risk of ruin tables were first applied to gambling, and rightfully so. In gambling, say blackjack, if you win a hand with the dealer busting, you get a 1-to-1 payout, so if you put $100 on the hand, you will win $100. It helps to know this ahead of time so you can see if your edge, percent chance you will win over time, is enough to make money or lose money. However, this is the tricky part. In trading, we rarely know exactly how much we are going to make per trade in terms of profit. However, we do have an entry and a stop loss, so we are aware of our risk and potential profit. But here is the harbinger and some questions to consider.
This right here is the most important question.
Do you know exactly how accurate you are going to be with your trading based on the system you use? In other words, have you modeled it so you can predict its overall accuracy within a few percent each month?
That is huge, right? So you have to know this. You have to know your accuracy. And then looking at this graph right here, this is the probability of you blowing up based off a win ratio and payoff ratio. The red is guaranteed to blow up. So if you have a 50% and 1-to-1 ratio, guaranteed. But if you have a 50% win rate and a 2-to-1 risk reward ratio, you have a 0% chance. So you see, anything in the green area is acceptable. The white is not. You don't really want to be in this area, the white area. You want to be in the green.
However, if you can increase your edge, accuracy, by only 5%, you decrease the risk of losing your entire account to 0%. This shows the power of increasing accuracy ratio in order to lower your risk of ruin and increase your overall edge in the market. Now, let's take the same accuracy ratio of 25% but increase the reward to risk ratio to 4-to-1 from 3-to-1. This again turns your 51.7% risk of ruin to 0%, increasing your edge tremendously. Now, here's the challenge. In trading, it is harder to increase the profit target from 3-to-1 to 4-to-1 compared to increasing your accuracy ratio by 5%.
Okay, so how do you find out this information so you know if you're trading correct or not? If you're using Apex Trader Funding or Topstep or any platform that uses Tradeovate, it is very easy. Just go to Tradeovate, then go ahead and log in. And then once you're on the main screen here, you can see that same account that I've been working on this whole video with. So here is my position I'm in right now. I need to actually exit some of this. So I'm going to head over to here. I'm going to go ahead and exit one of these because I'm in profit, $500 or so. I don't want it to go against me. So I'm going to go ahead and exit one of these in each account, just one contract, one out of the 3 contracts I have. I'm in multiple accounts, so I need to sign back into my take profit account, which I got stopped out on the in-queue side. Now I'm going to exit one more. That was my profit target for it. And then I'll leave a runner on at break even. Back to the video here. Okay, so if you want to know your statistics, go to your performance tab, which should be reports tab. That's right here. It's going to be right here. So right there. Boom. It's right here. So right there. And you're going to click on that. Let's click on there. And then you go performance, say this week, today. We'll just push today. And then that way I can see my performance for today. Push go. Now it's going to give me a whole bunch of different things to go over here, but I'm going to show you guys a quick shortcut here. Go ahead and screenshot it. And if you're not familiar with it, ChatGPT can now accept pictures. So I'm going to head over to ChatGPT, which you should have a good understanding of what it does. I've created my own little mentoring bot here. So all we're going to do is take that picture that we took a screenshot of and put it into ChatGPT 4. You're going to have to pay for the plus. I guarantee it's worth it. I've created my own little mastering trading mentor bot that helps me break down this stuff. So I'm just going to simply ask it, give me my key statistics for my trading, make sure to provide risk versus reward, and so on. Give a list of the key trading statistics and grade my trading for the day A through F and Y. So here's what it busted out. It said my gross P&L was, so let's get profitable trades, 57.14%. So let's go back to our risk or ruin calculator. And then my winning trades are 12 out of 21.
No.
Which is 1.6 R. So my accuracy, so my payoff ratio is 1.6. And then
Stop. No.
my drawdown for the account is $2,500. On average, what percentage of that am I risking per trade?
You're right.
So it says approximately 4.82% of the drawdown I'm risking. So in a 50K account, we can only risk 6% is 2,500. So assuming, let's calculate. So there we go. 0.0049% of hitting the risk of ruin. So I'm good. You guys need to do this too. Last but not least, number 5 on the list of the mistakes I see traders making the most for Apex Trader funding evaluations is trading for hours and hours on end without breaks, allowing mental fatigue to kick in. Trading for long periods of time, this has a detrimental effect on anybody's trading abilities. A really good book that explains this is The Hour Between the Wolf and the Dog. It breaks down the chemical reactions in your body as you trade. So I found a study of mental fatigue because I know for me it exists, but I want to prove it to you guys as well. So this is a study measuring the brain's activity doing a task given over a set of time. So as you can see in every part of the brain, as you start doing a task and you get into the seconds and minutes of it, your ability to function, your brain's power is declining in every single area of it, right? You see the downtrend there. And then you also have just the normal fatigue, but there's also the dangers of decision fatigue, lower productivity, and more errors.
The human brain needs time to relax and re-energize in order to perform at an optimal level. With workdays extending farther into the evenings and the line between work and home becoming blurred, many people aren't getting the break they need. The law of diminishing returns works everywhere, including the workplace. At some point, efforts become less effective and persisting can cause more harm than good. The graph below explains in more detail.
So total output, productive phase at the start, every unit of input leads to productive gains. You can think of this as in trading. In the beginning, you're going to be trading really, really well. And then imagine this first line is a 30-minute dash. After 30 minutes, your ability to trade at a very high level is going to diminish. And then your ability to make decisions quickly and good decisions will lead you to trade at like break even. And then look at this next dash line at 45 minutes. You can think at 45 minutes, you're going to start getting negative returns for every decision you're making. This is not just an assumption. This is backed by studies that scientists have been doing for many, many years, peer-reviewed papers showing that favorable decisions decrease over time. So to overcome this, you need to take a break. You don't need to sit there and trade for hours and hours on time. For me personally, I trade in windows. So what do I mean by that? When I start trading, I come in and I trade from 8:30 a.m. until about 9 a.m., 9:10 sometimes. And then I take a break and then I come back at usually around 9:40 or so, and then I take a break, and this break's a little bit larger. I don't come back until 10:45, until about 12 o'clock actually. So this one I'm pushing it a little bit, but it's my favorite time of the day to trade. And then I take another break, and then I come back at a little bit before 1 o'clock, and I trade this time slot. Usually this one is pretty quick, about 40 minutes, and then I come back and I trade the last hour of the day. So right about there. So let's go 3, 2, 4. Now, can you guess which one I give back the most of my gains in? None of them. There's not one single one of these that I can pinpoint that I lose or make more money in. It's pretty average because I'm spreading it out through the day. I'm taking breaks. I would say that this one is probably my highest if I would have to guess. And then I would say that this one is probably my lowest, just because the price action is a little tougher during this time frame. But taking windows and taking breaks allows me to chill. Most traders, you're not gonna fucking do this because you're chasing the dopamine rush, and because you have denied the fact that trading is gambling and it affects our brain the same way, you're going to deny that this even exists. You're going to deny that when you take a trade, you are getting a dopamine rush from it. But if you take a look inside yourself, you will find that this is the case, because I noticed this because I started explaining this to traders, and most traders will avoid this altogether and change the subject to something else. And at first I was like, what in the fuck? Why are they just avoiding this and not even acting like I just said this? It's because it comes back to the dopamine thing. It's telling a junkie to put down the needle. That's pretty much what you're doing. When you're telling a trader to only trade for 30 minutes at a time, telling a tweaker that they can only hit their pipe during a certain time of day. And no addict wants to be told that. I know this because I'm an addict myself. I used to be. So I know this. And the behavior was very similar and kind of interesting to me. So I'd push it until I got the response that they actually heard what I was saying. And I'll tell you what, the traders that took my advice and implemented this saw profitability right away. Traders that ignored it and just denied it altogether are probably still struggling. That would be my guess. I want to talk about the giveaways real quick though. When I do them, a lot of times they don't get claimed, and then I end up having to give them all away on my second channel during a live stream. So I just want to walk you through how to make sure you get the notifications, so if I do a giveaway, you know who the winner is. When you come to my YouTube channel here, make sure that you go to here and push all notifications. Surprisingly, only 1 out of 3 people that get chosen for the giveaways actually claims their account, either because they don't have notifications on or whatever the reason is. And then my subscribers on my second channel, this one, that are part of my membership that trade live with me, they end up getting the accounts all in one video at the end of the month. So make sure that you have the notifications on so you actually get the account. And then make sure you check out my website, guys. I post these discounts for you guys every day. I update it. Head over to here, and then just make sure when you're on the website and you're interested in a funding company, make sure that you click on the picture of the button. If you want to learn more about how I trade, you can check out the video in the right hand corner. That is my second channel. So appreciate you guys watching. Don't forget Apex Trader Funding, 90% off. Bulenox, 90% off. Take Profit Trader, 50% off, and then once you pass, you get a free account as well. And they have the best payout structures that I've seen by far. And then Topstep Trader Funding, we all know how good they are. Definitely check them out, guys. They are a winning set of companies that I guarantee pay you out. If they will not, I will.